Welcome back to the Crypto World channel, everyone. My name is Josh, and this video is an important video for all investors to pay attention to. Because in this video, I'm going to be talking about the potential collapse in Evergrande, China's second biggest property developer, and how a collapse in that company could affect other markets worldwide. So definitely make sure you're watching all the way to the end so that you're not missing out on all of this important information. And just before we jump into it, make sure to drop a like on the video down below. And if you're new to the channel, you might as well subscribe with notifications turned on for more videos just like this one. But anyway, with all of that out of the way, let's get straight to what this video is about. So right here, this is Evergrande's share price in Hong Kong dollars on the daily chart. And I'm sure you can see the huge crash that Evergrande stock has had. In fact, just from the beginning of this year to where we are right now, Evergrande's share price has crashed by more than 84% to the downside. And let's just say it doesn't look like it's coming back up anytime soon, because Evergrande, as I just mentioned, is China's second largest property developer. And in any real estate company, there's going to be some debt involved, obviously, but in Evergrande's situation, there's too much debt than what they can handle. Right now, Evergrande has over $300 billion worth of liabilities. So they're $300 billion into debt. And the problem for Evergrande here is in the short term, they don't have enough liquidity available to service all of that debt. For example, just on Thursday, there's $83.5 million worth of interest that is coming due on some of their bonds. And so right now, obviously, there's no telling whether they're going to pay that or not, but things are definitely not looking good. And especially if they do miss that payment on Thursday. And that is when Evergrande is at risk of a default if they cannot make this payment on Thursday. Because as you can see here, there's a 30-day period before a missed payment is considered a default. And for the beginners out there that don't know what a default is, it's basically if you cannot pay back all of your debt. And it essentially results in the collapse of that company, and all of that debt has to be written off by everyone else that has lended Evergrande money. So why is Evergrande in this situation? Well, believe it or not, there's actually some other companies out there that has just as much leverage as Evergrande, meaning that there are other companies out there that have similar amounts of debt to assets. And to start with, one major factor that could have put Evergrande towards this situation is a new set of policies created by China back in August 2020. So this new set of policies is called the 3 red lines. And first of all, straight off the bat, annual growth in debt is capped at 15%, which is already putting a restriction on Chinese companies. But as you go down the list here, the more guidelines that companies fail to meet, the more restricted they are on annual debt growth. And so the guidelines that companies need to now follow over in China is, first of all, they need to have their liability to asset ratio less than 70%. If they have it more than 70%, then they breach that guideline just there, and they go into this yellow range just here. The second one is net gearing ratio of less than 100%. Once again, if they fail on those two, then they go into the orange range. And then the third one is cash to short-term debt ratio of more than 1x. And if they fail on all three, then they go into this red area here, which means they cannot grow their annual debt at all. So these extra restrictions actually put a strain on China's real estate market, because the real estate market has been booming for quite a few years, and China wanted to press the brakes so that things don't get too out of hand. But that has potentially created a situation like what we're in right now. And combined with the fact that Evergrande has made other investments such as an electric vehicle company and a soccer club, and both of those investments haven't really generated enough of a return to help with the massive pile of debt that Evergrande is now in. And as well, even if Evergrande does make this $83.5 million payment on Thursday, in total, Evergrande still has another $669 million worth of coupon payments coming due through the end of this year. And for the beginners out there that don't know what coupon payments are, they're basically the interest paid on bonds, and Evergrande simply does not have that much liquidity available in the short term. So the best case scenario here is perhaps the Chinese government steps in and bails them out. But if that's the case, they're essentially rewarding the reckless behavior of Evergrande going further into debt. But if the Chinese government does nothing, then it's extremely likely that Evergrande could collapse. And if that happens, that will have a very negative effect on not just the Chinese markets, but honestly, it could ripple to worldwide markets. Because first of all, if Evergrande goes down, obviously they have billions of dollars worth of real estate and also unfinished projects that are going to be sold off for cheap. So first of all, having billions of dollars worth of real estate sold at a distressed price is going to severely impact the property market over in China. And not to mention, Evergrande has over 120,000 employees, so they're all going to end up with no job if Evergrande goes under. And on top of all of that, probably the biggest thing is the fact that that $300 billion worth of debt that Evergrande has will not get repaid to all of the other companies, investors, and banks that have lent that money to Evergrande. Evergrande. So this is where the flow-on effect starts. And by the way, the three biggest holders of Evergrande dollar bonds are the Ashmore Group, which is a huge company based over in the United Kingdom, and then of course BlackRock, which is a huge company based in the US, and UBS, which is another massive company based over in Switzerland. So already there's international companies that are going to lose out on a lot of money if all of that debt is not repaid. And of course, with companies taking a big hit like that, that can negatively affect their share price. And we're already seeing early signs of that over in the stock market. So this is the S&P 500 index. And as you can see, over the last couple of weeks, we've already started the decline, but only just recently things have started to drop a little bit faster, and we've just broken below the 50-day exponential moving average, which has historically provided huge amounts of support for the S&P 500. Now, there has been some previous times where the S&P 500 has just briefly dropped below the 50-day exponential moving average and then come straight back up. So obviously that is still a possibility, but with everything that's going on right now, it is honestly hard to be bullish on the traditional markets. But let's just wait and see if Evergrande actually makes that $83.5 million interest payment due on Thursday. Because if they do, then right now we could be looking a little bit better. But if they don't, once again, that could lead into a potential default on all of their debt within 30 days. And if that happens, that's when you're going to see a bigger pullback in the stock market and real estate. And so how does all of this actually affect crypto? Well, the stock market and crypto, believe it or not, are pretty well correlated during times of uncertainty. So this is on the Bitcoin to US dollar chart on the weekly time frame. That's what the candlesticks are just here. That's the Bitcoin price. And then the orange line just here, that is the S&P 500 index on the weekly time frame. And this shows you the correlation between the two, especially during times of uncertainty when everyone is panicking. As you can see here, during 2015, the stock market was entering a little bit more of a bearish time, just as Bitcoin was in a bearish time as well in the bottom of that bear market. And then of course, when the stock market started breaking back above its previous all-time highs and entering into another bullish time in the market, that is when Bitcoin entered a huge bullish time in the market. And then the stock market entered almost a euphoric stage just there in the beginning of 2018. And we started seeing some more bearish signs in the stock market. And that is when the 2018 bear market came around for Bitcoin. And that final capitulation at the end of the 2018 bear market actually came after a capitulation that happened in the stock market. And then of course, the famous March 2020 capitulation in almost every market. In a single day, Bitcoin crashed 50% to the downside. And overall, over those 3 weeks, Bitcoin crashed around 60% to the downside. And the stock market saw a similar massive crash to the downside. And also note that during times of bullishness in the stock market, we usually have extremely bullish times in Bitcoin. So obviously there's not a perfect correlation between the stock market and Bitcoin, but just generally speaking, when there's a lot of panic happening in the stock market, that usually transfers over to Bitcoin and the entire crypto market. And why does that actually happen? Well, there's two major reasons. The first reason is the fact that both of these two are denominated in US dollars. So of course, companies on the US stock market are valued in US dollars, just how Bitcoin most commonly is valued in US dollars. So if we see a major sell-off in the stock market, that usually means people are selling into cash, which is of course strengthening the US dollar. And when we see a rising US dollar, that only means one thing for Bitcoin. And of course, that is bearish for Bitcoin, because when you have Bitcoin valued against a rising dollar, even if Bitcoin basically stays the same, because the dollar is rising, it looks as if Bitcoin is falling against the dollar. And that leads into a further panic in Bitcoin. And the second reason why the stock market and Bitcoin are correlated during certain times like this is because investors obviously take a loss when the stock market dumps. And so to cover that loss, they might need to sell other investments such as Bitcoin, for example. And usually during times of uncertainty, when things are heading to the downside, the majority of investors out there, especially traditional investors that are used to the stock market, they are quicker to sell off their higher risk assets. So they're more volatile assets such as Bitcoin, for example. And so that is where all of this comes into play right now. And of course, if the Evergrande situation gets worse, that will not be a good thing for the traditional markets and for the crypto markets. But keep in mind, no matter how bad things get, this is going to be a huge opportunity if you stay active in these markets. Because as you can see here, previously, when we've seen dumps in the stock market and dumps into crypto, they are the best times to begin accumulating Bitcoin and the top cryptos that you've been doing research into, and also the top stocks that you've been doing research into. So keep all of that in mind as well. We could have some bearish times ahead, but it is temporary, and it will give you an amazing opportunity to potentially get in at some cheaper prices before the inevitable bullish price action that happens later on. Now, that bullish price action that comes later on, that could be in a month from now, it could be in a year from now. Obviously, it's very hard to tell from the situation right now because we're still in the early stages of it all, but just definitely keep that in mind as well. This is all going to pass, and there's going to be bullish times ahead later on in the long term. So I myself, I am going to be staying active in these markets. It's very important to do that if you want to take advantage of these amazing opportunities that are coming soon. And if you enjoyed this video or got something valuable out of this video, make sure to leave a like down below. And if you're new to the channel, make sure to subscribe to this channel with notifications turned on for more update videos just like this one. I normally post Bitcoin and Ethereum update videos every single day, but if something of this scale is happening, I will cover it on the channel, especially if you guys are suggesting it in the comment section down below like you have been. So if a bunch of you are suggesting the same thing in the comment section down below, that's when I'll be sure to make a video on it. So if you have any other suggestions, let me know in the comment section. And of course, if this Evergrande situation gets worse, I will continue to cover it here on the channel. So definitely make sure you spend a couple seconds out of your day to click that subscribe button down below with notifications turned on once again, so that you're not missing out on all of these future updates. And as always, I really do appreciate all of your support on the channel at the moment. I can't thank you guys enough. But anyway, that's about everything I have to say for this video once again. I really hope you enjoyed, and I'll see you all in the next video.